Afternoon. Afternoon, folks. Afternoon. Checking on coming through okay. I just thought I'd start a few minutes early. I delayed it 15 minutes because I was having my lunch. But anyway, fine. Now, hope you're all well. Who's in the room today? Iron Rib, how you doing, buddy? Darren, Ian, Kat, hope you are all well on this Wednesday. Took a break from trading last week. Yeah, I agree, Iron Rib. I think sometimes it's always good, certainly if you feel like... Maybe sometimes when you feel like there's an echo, is there? Maybe sometimes when you feel like just give it a second. Just give it a second, Kat. It might finish off. Testing, testing. Is it still there? Still there? I think it's because I have my speakers on. Oh shit! There's still an echo, is there? Good now. Yeah, I think it's because I have my speakers on, and sometimes it goes loops, loops, and loops. So I just have to remember to turn my speakers off. Trevor, how you doing, mate? Hope you're well. Sorry, what was I saying? Yeah, sometimes it's good to take a break from now and again. You know, I'm taking one in about 12 days, but sometimes I know what I'm like. I might just be like, oh no, I want to see what the market's doing in the morning. But in terms of streaming, doing YouTube stuff, you know, the member streaming on RTFX, I'm going to take a break from that. But I took a break. I remember I took a break. I think some of you know this, but a 2-month break over Christmas. 2017 must be now, something like that, and it helped me massively. So sometimes taking a break, a refresh, when you feel like you're going nowhere, can help. So yeah. Darren, I'll go through. So I'm going to do some questions today. If you've got any questions on you know, this is a safe space on your journey, things that you might be struggling with. I've got 2 really good ones that I'll go through from Discord. Anything you want to ask me or anything, I can ask all your questions today. Because the markets are quite quiet, I thought I'd do something a little bit different. I will go through on what I'm looking at, but if you've got anything you're struggling with or anything, just put it in the chat. Don't repeat your question. Yeah, good point. Yeah, good point. Yeah, but just put it in the chat and I'll try and maybe I can help you. Maybe I can't. I'm not making any guarantees, but maybe I can. Darren, hey Ryan, do you think you could share more about your FTMO challenge risk management, as 2% all along been your risk from the start? Yeah, so, I mean, generally for me, because I'm more selective, I always use 2%. You know, for example, I only took 2 trades last month. I haven't taken a trade this month yet. So for me, in order to get that 10%, I mean, there is months where I do trade more. There's sometimes a week where I take a trade every day. You know, it's rare now, but it can happen. But for me to get to that 10%, if I risk my 1%, then I ain't going to get there. So it depends on how much you trade. I always recommend bumping up that risk on the challenge anyway. So if you trade 1% and maybe you are a bit more selective, this doesn't go towards scalpers or anything, then maybe putting up to 1.5. Again, you just got to think that 10% is difficult, and bumping up for that challenge sometimes makes sense, and it certainly makes sense for me. Within the verification, again, this is slightly different because I trade 2% anyway, so I keep it as 2%. If you have bumped up for the challenge and you are a bit more in the markets than I am, then it would make sense to go down to your normal percentage risk, because you've got 2 months there to get 5%, which, albeit, yes, okay, can sometimes you have to be a little bit lucky within those 2 months as well. There's months you can lose money, we know that. But you do get a little bit of time. And the most important part, well, they're all important, but as soon as you get that account, I do reduce my risk to 1.5. So as soon as I got my last 100K, I went down to 1.5 because I don't want to blow it when you first start. And even going down to 1%, even going down to 0.5%, just when you start it off, because when you get this account, there's always that emotional aspect involved, right? Because you're thinking, shit, I've got 100 grand, I've got 200 grand, look how much money I can make, this is so exciting. And you don't want to be going and blowing it in the first 5 trades of your account. So yeah, that's my kind of personal strategy. Once I get that buffer, you know, I always look for around a 10% buffer, then I can increase my risk to 2%. If you can, I mean, ideally, if you can not take anything out, I always recommend not taking anything out until you get at least a little bit of a buffer. Which just gives you that security that you've got 20% to lose. It's unlikely you're probably going to do that. That's my personal strategy anyway. Because the main thing here is We don't want to lose it. You know, we want to keep that account, and the more you build it up, the harder it becomes. You're still going to have that 5% rule, but the harder it becomes to lose it, you know. To confirm that is 1.5% per trade, but you open 2 trades for every position. No, it's in total, Ian. It's in total. So you still can't lose 5% a day on anything with FTMO. I'm not very good with this mouse right now. But no, if I'm taking full risk, so it'll be 0.75 per position. Yeah. So I wouldn't, because that would be risking 3%. That's too much for me. Too much for me. Okay, let's go into the markets. Might as well start with this dollar because I'm on it. So DXY I had on my list for potential longs yesterday. And this was a good lesson for me. Even I, to this day, get a little bit of FOMO when things are moving to the upside, i.e. when this broke through. It was a decent setup, but it just wasn't quite enough. This is probably, I think, the importance of waiting for that accumulation prior to the level. Because most breakouts are fake outs. Most breakouts fail. 70% of those breakouts fail. And you know, even I was looking at this thinking, shit, should I have taken that long? But again, going with that gut feeling that you need that 20-period catch-up has avoided me a bad trade again, which is good. So I don't mind seeing this. What I think, there's two possibilities here for the dollar. One is this is a fake out. We go to stop locations and potentially here and move back to the upside. The second, which is probably my main bias here with the dollar, is that we continue in that movement for our complex corrective. So we've got our A wave here. We've potentially got in B. So we did say during the week that even though this was pushing on, it wasn't pushing on with a lot of momentum. There wasn't really that much impetus there for the dollar moving to the upside. And we may have got the signal that we need, potentially, that this wants to come down and give us a multi-leg pullback, i.e. our ABC, before movement to the upside. You know, we have to remember where we've come from. And again, looking at this price action, and you know, I don't get it right a lot of the times, and I may not get it right now, but this price action for me was like, okay, maybe this needs to turn into a complex before continuation. So that for me is my bias in the dollar. I think how you can use this within your trading if we do get this, you know, looking for entries here, potentially, if volume's coming in, you get that catalyst to go long. Depending on where the SPX is, for example, if the SPX is pushing on, and you're looking at the dollar here, maybe plays into UJ, USwiss, might not be a bad idea at this section. If we are in risk on, if we're in risk off, you could look at maybe the US dollar against those commodity currencies. But yeah, that would be my bias with the dollar. Upside movement is still there. I think we could get some intraday shorts though. PO Venture, I'm 3% down on the 200K FTMO challenge. Can anyone help me pass? I'm really struggling. 3% is not a lot, PO. You know, the first 100K I passed, I was down. Always the first thing I say is forget about passing it. Forget about it, because it makes it daunting now that you've got to get 13% in however long you've got. Just think about getting that free repeat. So focus on getting 3.1%. Right, just getting past that 200K mark so you get that free repeat. It just psychologically helps you. That is it's always going to be my first piece of advice for everybody. Forget about the 10%. Just aim for the free repeat. It just helps you manage that challenge a little bit better. Okay, setup today. Gold is one of them on this 4-hour chart for a potential breakout and retest. I know it's counter trend. It is counter trend because we've had a decent move to the downside. However, we have got a bit of confluence with this outside bullish engulfer here, if I zoom in. And this price action isn't looking great right now for continuation to the downside. Now, the path of least resistance is to the downside in gold because of the trend we are on, clearly. But with this, and certainly the last few days, it's kind of shifted my mindset a little bit on, okay, we could still go down, but there's an argument here for gold moving to the upside in this counter trend. We have got this 200 in the way, but if we break through with gusto at this level that we are at, so we've kind of had a slight break here, but I want to see a proper break above that 200, retest of this area to go to the upside, I would take gold long on that retest. You know, we could be getting a retest now as we speak. This could be our retest right now, in which case I can't get involved in it. But for me to get involved in this, it would need a breakout retest. Now, usually my stops for the breakout retest would be underneath the previous swing. But for the 4-hour breakout retest, let's say I have a hammer candle here on high volume, my stops would be underneath the candle, in which case this 200, i.e. this area of dynamic resistance to price, is not in my way for the one-to-one risk reward. So I kind of like that, you know, just because as it progresses, and again, path of least resistance is to the downside, if we get a break above that level on the 4-hour, which I was talking about, we're above that 200. In which case, if we get a break today and we close above that 200, we might get a retest of it, in which case we can get in for movement on this counter trend to the upside. So I kind of like that. You know, I kind of like that, waiting to see how that progresses. Another one is Swiss yen. Swiss yen I like for movement to the downside. In this daily chart, I was looking at it long. However, if you look at price action from here, okay, we went into that corrective phase. Once we broke out of it, you wanted that follow through. We've not got that. See, we're rejecting this area. We've got a few wicks to the upside here. So for me, looking at shorts here is now giving me that confidence again to look at shorts. So the 4-hour chart, we're getting that squeeze into this area. You can just kind of see it. Squeeze into the area. We can look at a double V reversal, corrective from this initial impulse, and tagging the area again. We're looking for the same thing, that squeeze into the area. So if we do get a push down, remember, if this moves to the upside, fine, I take it off. If it breaks above this area here, then it goes off my watch list. But if you come down here for another reload to take this short, I think, again, there's something there in it that I wouldn't mind taking. Because of that daily, because of that lack of follow-through, it's made me question whether this wants to move to the upside. But again, let's wait and see. And finally, not finally, sorry, two more, pound USD. Pound USD. Here, looking for shorts on this intraday chart. So on this 1-hour chart, we've got our basing structure. We kind of entered into that corrective from this impulse, from this basing structure. Getting our handle pattern, looking for a breakout, retest, move to the downside. Not much really to say on this one. It looks good on the daily. We are going with that trend, pretty healthy downward trend. Here, yeah, I'm happy to continue with that. 4 hours good. Broken out of structure. We kind of had a slight ABC here. Push through in that corrective phase, as you saw on the hour, roughly about back to that 20. Looks to be a bearish engulfing on a little bit of volume on London Open for movement to the downside. I mean, that's all very simplistic in nature. Right, this is good. I like this trade for potential shorts. Now, I had someone in the RTFX group go short on pound USD at this area, right, on this particular candle. So I'll go into why I think this was wrong. Okay, so we talk about pullbacks. You remember my definition on pullbacks, or the definition on pullbacks, is you can either get single leg pullbacks or multi-leg pullbacks. Okay, and defining whether a trend or a movement to the downside will be a single leg or multi-leg, you can do it in a few different ways. So for me, if you look at this price action here, okay, when we get this particular bar here, it would put into my mind of a little bit of doubt whether this movement to the downside is going to have a single leg pullback for continuation. Okay, so this one particular bar, and that's all it takes. Because remember, there's psychology. There's people within in each individual bar, and each individual can't speak. Each individual candlestick tells us a story, right? So when you see this kind of impulsive momentum to the upside with this bar, even though we've got a rejection here, makes me wonder whether this is enough for this downward movement. Okay, and that's exactly what we got. We got a push through creating B wave here, can't type, and then a push up, probably taking some retail stops out very slightly here before we continue to the downside. So it's important to try and differentiate whether it's going to be a steady state pullback, which is quite clean for continuation, or you get moves like this, a little bit impulsive, i.e. kind of like this, that maybe need an additional leg to digest it, make it a little bit healthier for movement to the downside. So, yeah, have a look of that. If we look at, and I'll show you an example of it from yesterday. If you look at USD Czech here, I was looking long on this pair, but individual. What do you mean? What do you mean, Pio? Individual? Oh, right, yeah, sorry. Can't speak, huh? So if you look at this, for example, this retest, which I was looking at yesterday, on this, which you could consider an ABC. I mean, this could still be an ABC here. It's not a trade that I'm involved in because it's broken underneath here. But if we look at this leg, a little bit impulsive, right? A little bit looking more like our V reversal rather than our steady state corrective. So if I give a good recent example of a nice retest, if you go back to pound Aussie, down here, look at this. This section right here. It's not a trade that I took. The context wasn't there. But if you want to see exactly what I want on a retest, this is it right here. Okay? Decent Marabuzzo candle on a breakthrough. We obviously had nice accumulation here as well, which is great. That's exactly what you want to see. But look at that retest. Nothing there is kind of coming out on the chart and thinking, oh no, maybe this might move to the downside. The trajectory is good. It's in a nice kind of steady state back to that area. You got your double rejection wicked here on these two particular candles on that 20. Okay, and then you had your Marabuzzo on high volume as your catalyst to go long. And look what happened there. Right? Decent move to the upside. So, yeah, this is, I mean, look at the volume as well. Look at your volume, lowering volume during that retesting phase. So if you want to take a screen grab of that, of what kind of retest you look for and what kind of retest you like, that's exactly what you want to see in terms of a steady state. And again, you know, there you're trailing the stops, decent movement to the upside. Talking about pullbacks, I was stopped out of CAD yen yesterday for 2% profit. What would you want to see to re-enter short? CAD yen. CAD yen. Yeah, so I mean, just to go over today, I'm looking at gold, pound dollar, and oh, sorry, I didn't go into I'll do USD Hong Kong dollar first, Ian, and then I'll go into CAD yen. This USD Hong Kong dollar is something that I do like on this 4-hour chart. You can see the basing V here, getting another reload back to that area. Possibly we could be getting an ABC, push upwards for a breakout to the upside. The daily is nice. You know, we had a break of structure here, pull back to that 20, a good outside bullish engulfer on that 20. You can see the V reversal more clearly on the daily. Going with that trend, this is nice. USD Hong Kong dollar is nice. I just need another potential tag here, accumulation, take to the break. Or if we want to come back for a complex corrective, we can do that. ABC, push on, create our head and shoulders within our handle pattern to go to the upside. This is nice. USD Hong Kong dollar. Okay, CAD yen. CAD yen. Stopped out of CAD yesterday for 2%. What would you like to re-enter short? I would be a little bit wary. Again, I would just be a little bit wary of the CAD yen now because this is certainly bullish. You know, we've got it looks different essentially from here. Looks different from here, right? With this price action. Not saying this can't move to the downside. You know, SPX looks decent. A little bit more risk on nature coming into the markets. Omicron being a little bit less. You know, the reports coming out saying it's pretty mild symptoms. You know, we're getting a push on in the SPX. So whether that causes weakness in the yen, we'll have to wait and see. I wouldn't be looking at selling this right now, Ian, if I'm being perfectly honest with you. I'd probably be looking for a reason to go long on intraday charts. You know, broken through structure here. We've had a decent move to the upside. We've not completely failed either. You know, so sometimes if you're looking for maybe this to be a stop hunt, you'd expect a fake out movement to the downside. We're not getting that now. We're getting some price acceptance above structure here. In which case, yeah, I would, 20 period curling up. I would probably be more inclined to be looking for it long rather than short. I mean, look at this. Here's a good example of a possible loss of momentum, right? So if we look at this price action, the sellers aren't getting much reward in terms of lower lows for decent impulses, right? They've all been bought into. So that's a good example of loss of momentum because that's coming on this impulse to the downside, right? So what it could be, right? If we talk about impulse, loss of momentum, harder reset, this doesn't really look like that harder reset. This just could be a loss of momentum from sellers, and now we're changing to the upside. With your harder reset, you want it to come in the form of a nicer complex corrective for continuation to the downside. But that daily chart has changed that sentiment, personally, for me. Could it get reaction off that 20? Yes, absolutely. I would just worry about taking that short, personally, in my personal opinion. Thanks for 800 subs, by the way. 800. Appreciate that. I still have that 1,000 sub goal by Christmas. I'm not sure if I'll be able to do it. I just ordered a new camera and stuff, so I'm going to try to do some more actual YouTube videos, kind of vlog style videos, try to make them a bit more, I don't know, funny or whatever. But I appreciate the 800. Let's see if I'll be able to get there. If you can like the video, it'd help me out a little bit. I'll stop bugging you after 1,000, but if you can like the video, that would be great. Okay, let's go into some questions now, because I think some of these are quite good, and maybe some of you will get some value from them. If I zoom in here, how do I zoom in? View. Euro Aussie short. I like the idea of selling the euro. Mohammed, absolutely. Aussie is strong this week. I'll go into that. Okay, let's zoom a little bit. Actually, no. So this is a question I got through Discord. I won't say the name, just to remain confidential. But so he says, I'm a college student currently who's been interested in money since I was a baby. Seriously, I used to count our church's offering every Sunday to make sure they have it right. I appreciate me. And investing for a few years. I've gone through the wanting to get rich phase already and pretty clearly understand what trading can do for me realistically. Good. I blew one account on the stock market and one crypto account years back, which led me to the discovery that all of the gurus were selling me a lie. Yeah, always. For these kind of online gurus, just be aware of the ones that sell a lifestyle. That for me is number one. If you see somebody selling a lifestyle rather than trading, bang, off you pop. See you later. I'm not interested in you. For the past several months, I've kept a journal with all my thoughts, ideas, and have back-tested all sorts of different concepts and strategies so far with no success. It's been months of consistent testing, and I've yet to have a consistently profitable one. I've read books on deliberate practice and mental structures and work hard every day to strive for improvement. I'm hoping that this community can help me with that. I will never give up on this. Good. But hundreds of hours of manual backtesting and strategy development so far has led me to only developing a much more defined and specific mental structure towards the Forex and commodity markets. In a long-term rut, yeah, I've been there, and I hope this community can help me claw myself out of. So that's my story. Amazingly frustrated, but still driven to succeed one day. I look forward to hearing from you. I feel like I need professional guidance to help me get past this stage because of how long it's lasted, but who knows, maybe tomorrow is the day I finally crank out a good back test. So, I mean, I completely resonate with you saying you're in a rut, right? Because I was in a rut. I was in a rut for 8 months, I'd say. And I was doing everything I can. I was watching every single video. I was reading every kind of article. And I was doing everything, like every day. And I wasn't getting anywhere. I remember saying it to Megan, my girlfriend. Doing all this, I'm working so fucking hard. Like, why am I not getting anywhere? In most things, right, if you work really hard, you get somewhere. Sometimes in trading, you work really hard and you don't fucking get anywhere, you know? And you're thinking, what? Why? You know, why me? Why is this person doing well and why is this person doing well? I know I'm working harder than him, so why am I getting there? But it's interesting. It's interesting that with your back testing, a lot of people find a strategy that does work. So it's interesting to see that this person can't find a profitable strategy on the back test. What I would say if you're watching, mate, is send me a message because I would like to see the kind of details on what you're doing, what your actual strategy is. Because there's a lot of very simple concepts out there that work. You know, one of the simplest one is naked Forex, right? Naked Forex, looking for a hammer candle or engulfing candle at an area of support or resistance, taking it as a counter trend move. For example, an example of that recently was Euro-Swiss. Okay? Euro-Swiss here. That's a naked Forex trade. So coming from a long move to the downside, outside bullish engulfer, move to the upside, okay? And that strategy works. It's a very powerful counter trend strategy. So as Einrib said actually recently, or today, that taking a little bit of a break from it sometimes can help. A little bit of a break, a little bit of a fresh perspective on the markets, and then coming back and saying, okay, do you know what? These things are not working. Let's try something new. I think what you have to figure out, for me, is I stuck to what I resonated with. Okay, so I always resonated with the breakout retest. That's from the very beginning of my trading. Yes, I went away from it and I came back. But what I then decided to do was say, okay, I like this concept. So you have to figure out what concept that you like. Do you like counter trend trading? Do you like fibs? Do you like breakouts? Do you like breakout retests? Do you like the concept of liquidity? Do you like whatever you like and whatever resonates with you, whatever you understand, focus on that. Because there's a profitable strategy within every single concept. Not every single concept, but most of the common concepts in trading. Okay, pullback trading. There's a profitable strategy within that, obviously. Breakout, there's a profitable strategy there. Breakout retest, liquidity. There's profitable strategies within every kind of, let's say, discipline of trading there is. So my first thing would say, instead of me, again, I don't know too much about this, but what I will say is focus on that one concept you like. If you need help with that, send me a message. I'm happy to help. And then look into, okay, how do I make this, if you're a breakout, what do I like on the breakout? For example, with me, 20 period, volume, accumulation, going with the trend, looking at higher time frame confluence. All these things kind of develop from that. So maybe, yeah, looking at one personal concept and going from there, I think may help you. But I know the feeling of being in a rut. I would say, you know, it's coming up to Christmas now. You know, a lot of people go on holiday. The markets aren't great. Maybe taking a wee break, you know, take a little bit of break, refresh over the New Year's, go and spend time with your family, come back in January and say, right, this is what I want to do. But it's great that you've been, you know, reading all these books. It's great that you understand what trading is. What it seems to be is you just need a strategy that works. You know, that's just what the number one thing is. If you're reading all these books, and it seems to be you're getting the psychology side down, you just need that 20%, and that's technically the easiest part. The strategy is the easiest part. I can teach anybody my strategy. Whether they employ it profitably is down to them. So, yeah, send me a bit more information, mate, on wherever you want to. Let me know what strategies you're doing, and I'll try and help you out. Okay, second questions, below my questions. Again, if you've got any put it in the chat. You want to know anything about me, I'm an open book. I'll tell you when I've fucked up. I'll tell you when what I think I'm good at. I'll tell you anything you want. Put it in the chat, no problem. Below my questions, too many of them to answer on live maybe, so if I get it, you can't get through them, but it would be great if you could. What signals do you look for a good breakout? What signals do you look for a good breakout? What signals do I look for? There's quite a few, to be fair. So if we go and break it down pretty quickly, number one, you've got your trend. Okay, you've got your trend. So your higher time frame, I can't write with this mouse. So your higher time frame confluence, this is really important. What can we do to define our trend? You can use moving averages, or you can use Dow theory. You can look at price action, you know, whatever you want to do. You're looking for a healthy trend in that direction. I do take counter trend moves, but that's essentially what you're looking for. Okay, two is the context. So on my context, I only take breakouts on the 4 hour plus. You know, I found out that I liked three concepts, which was the head and shoulders, the cup with handle, and the V reversal. Okay, so those are the three contexts I like for my pre-breakout plus accumulation. You know, accumulation plus volume plus 20. It's actually probably too much for me to go into right now. I might do another video on that, but there's a lot more actually. I won't go into that because I probably need a full session on that. Which time frame do you find most suitable for a swing trade, breakout, and intraday? Well, swing trading generally is more done on the daily 4 hour time frame. Breakout, I only trade on breakouts. I can only take from the 4 hour and daily, potentially weekly as well, but I don't really do that. Intraday is, I mean, obviously your 30-minute, 1 hour, 15-minute time frame. I know, I used to be good with this mouse. I don't know what's happened. I think the sensitivity is kind of messed up a little bit. So for my breakout retest, I use a 30-minute and 1 hour only. I can use the breakout retest on the 4 hour and daily. They're just more rare. Okay, but swing trading, yeah, 4 hour daily. Breakout, 4 hour. I don't recommend trading breakouts on anything less than the hourly chart, really, because of the noise, the wicks from that kind of time frame. And intraday is obviously intraday. But what do I think is the best time frame? The 4 hour. Absolutely, the 4 hour is the best time frame for me personally. How long did it take you to find a suitable style and be consistently profitable? 2.5 years. How long did it take? So it took me 2.5 years to be consistently profitable, I would say. And then to find a suitable style, I think maybe it might have been a year after I started where I said, okay, I'm going to focus on the breakout retest. So it did take me a hell of a long time to, I know it sounds so simplistic, right? But it took me a long time to develop that, the strategy that I have in terms of the breakout retest. But yeah, so I'd say 2.5 years consistently profitable, maybe 1 year to figure out that I wanted to be a breakout retest trader. And then I developed the breakout, as I go on after that. When you have a drawdown, do you step away from the charts or look for other opportunities right away? I don't step away from the charts, right? But I am selective, so it's kind of a difficult question for me to answer. Drawdowns don't affect me as much as they used to. They piss me off, yeah, but what I kind of think and what I kind of get in my mind is every losing trade for me is closer to that winning run. And that's why I said all summer. I don't know if you were there for summer, but I kept saying, like, this winning run will come. I know if I mess up and I over-risk and I do stupid things, it ain't going to come because I'm going to be blowing my account. So every losing trade is closer to that nice winning run, and they always come. The winning runs always come. So that's something that kind of helps me. Obviously, my data, my backtesting, maybe experience as well, helps me within my drawdown. And just understanding that it's part and parcel of the game. People are going to lose money. You're going to lose trades. When I was playing football, when I was playing whatever I'm playing, I'm a competitive guy. So for me coming into trading and that ego side of things was difficult to lose because I didn't want to be a loser. I hated losing. But you have to understand that that's just part and parcel. Everybody does it. And if you get that experience of being consistently profitable, if you have that back testing results, which I think are important, drawdowns don't affect you as much. They do annoy you, don't get me wrong, but you won't be doing stupid things like you used to do. So sometimes you do need to step away. Sometimes when market conditions aren't great, for example, the end of December now, just go on holiday, I think, come back in January. Summer, sometimes go on holiday, don't look at them. Stepping away can help, certainly if you're a bit more inexperienced or haven't been trading for as long. But you'll find that as you progress, as you go along, you'll just accept them. I know that's easy for me to say now, and I didn't think I would ever say that, but it's just easier for you to accept them, to be honest, as you go along. But one thing I will say, if you are a smaller time frame trader, maybe 15 minutes scalper, yes, get away. Get away from the charts for an hour, 2 hours, 3 hours a day. There's always tomorrow, but there ain't a tomorrow if you mess up and you blow your account. Or if you over-risk. Over-risking on 1 day. It used to be 1 day for me. I used to mess up everything. And it would cost me months. It costs you months. And that's why I just can't do it. I've gone so far. If as I said before in another stream, if I over-risk or if I do whatever and I blow my FTMO accounts, I don't think I could come back, so I just can't do it. I can't do it to myself. Similar question for a missing trade. Missing trades I don't care about. The only time I care about missing a trade is that pound Aussie in August. But I don't care about missing a trade. Doesn't matter to me. It honestly doesn't affect me. I don't get FOMO as often, but I don't... missing a trade doesn't really affect me personally. How long do you look at charts per day? How often do you come back to them during a day? So I do my main scan in the morning, which takes me about an hour. I love that time in the morning. I put my music on here. Right now in Dubai, the weather's lovely. Yeah, it takes me about an hour, and I could be done. You know, if I didn't do the business and on all that kind of stuff, I would be done. I know roughly which times things are set up. So for me today, I know gold won't be till tomorrow. Pound USD maybe over the US session. The other ones won't be till tomorrow. So I don't need to. I don't really need to check it. So yeah, I could do my job in an hour every morning. Check them, maybe check them every couple of hours. I kind of know when they're going to set up. Do I set signals for them? No, I don't. I don't set any alerts. I kind of understand when they're going to set up. How did you perfect your trading style? Very simple, backtesting. Backtesting, backtesting, backtesting. That's how you perfect it, and that's how you perfect it risk-free. Okay, that's where I developed the 20. That's where I developed volume, because you can understand, because you just go through price action right now. In real time, you're waiting for these 4-hour candles to imprint, right, which takes ages. Backtesting, you just press a button and off we go, and you start to notice things. You know, when I backtested GJ, I noticed that if I see a shift in momentum, I'm out. If when I backtested Kiwi dollar, if I see a shift in momentum, I'm not out. I wait for that swing, because the Kiwi dollar moves better than GJ. GJ is very volatile, right? So when I get that shift in momentum, what would normally happen is it comes down and stop me out. So I'll take the money while I can and move on. Can you recommend some sources of books, website references you've used and found help? One thing I will say about this is I got better when I stuck to one source. Okay, so there's one source. If there's a trader you like, okay, you can stick to that. If there's one website, whatever it might be, investing.com, where else is there? Daily FX. If you like that, stick to one, because what you normally have, if you've got too much information, can lead to that analysis paralysis, right? Where you've got too much things in your head thinking, well, this should go this way, this way, this way, this way. It's too much information. So I broke it down, and I kind of listened just to my mentor, and that was it. You know, I used to watch his streams. He was on forexsignals.com, which is a great website, by the way. And that's it. That's all the information I cared about. When I backtested, I realized, and I never used to like the fundamentals. You know, when I backtested, that wasn't there. I didn't know what was happening in June 2014 on the Kiwi dollar fundamentally. But I ended up backtesting and becoming, you know, all my results were profitable. So that's why I'm like, I don't care about that stuff. So sticking to what you know and having a bit of confidence in yourself also does help. In terms of books, the best book recommendation I have is Trading in the Zone by Mark Douglas. That is the best book recommendation. In terms of, actually, I think I have it there, on somewhere there. Another, in terms of technical analysis, Steve Neeson's Candlestick Bible, Japanese candlestick techniques. Steve Neeson, anyway, the founding father of technical analysis. That's a good technical book. Obviously, other books you can read. Intelligent Investor. Naked Forex is good for beginners. That was my first beginner or entry into technical analysis. But Trading in the Zone is a great book, and that's something I always recommend to read. But good questions, yeah. I'll go through your guys. From where did you learn trading? Where did I mainly learn trading? I think when I turned my trading around, it was through forexsignals.com. Okay, so my mentor was a guy from there called Mark Bennell, Aussie guy. Trades very similar to me. And they kind of changed my trading around. And a lot of people bash on communities, right? In some respects, I used to bash on communities as well, very, very early on. But let me tell you, joining a good community is massive. It really is. You know, you're not by yourself. You're not doing it on your own. And when I joined that community, even though, yes, okay, they cost money, they're worth it. They're worth it. So if you're sitting there, you're not part of a good community, RTFX, links there. But joining a community that also resonates with you, joining with a trader that resonates with you, makes such a difference. Makes such a difference. Because you're not doing it on your own. Everybody's doing it, and everybody's there to help you. And that massively helped me as well. So yeah, I would say Forex Signals. YouTube as well. You get a lot of good information on YouTube. You get a lot of bad information on YouTube. This is why, because remember, anybody can upload anything on YouTube. This is why these paid communities are quite good, because you're getting reliable information. Not saying that there's bad content creators on YouTube. Absolutely not. There's loads of great traders on YouTube. There's also loads of shite. So, yeah, so that's where I learned. ForexSignals.com. Would you share how exactly you incorporate volume in your trades? So, volume mainly comes in a few ways. But for my personal trading, if I talk about let's talk about the breakout retest first. Okay, if I talk about the breakout retest, I don't care about the volume here in the context, right? If you've got a cut with handle, okay, in the basing structure. Within this section, ideally, you'd like to see volume down here, i.e. your simple pullback volume for continuation. Okay, because that's essentially what we're getting there. If we have a lot of accumulation, I like to see lowering volume there. But with the breakout retest, what I'm mainly looking for is volume on the break, okay, lowering volume on the retest, and volume on the catalyst, okay? So, yeah, that's that. In terms of breakout retest, if we're talking about the breakout, you want to see volume on the break, lowering volume on the retest, higher volume basically at the retest phase, okay? So when the market's there, if it gives you your signal, your hammer bar engulfer, on increasing volume, that's perfect for me. That's what I want to see. With breakouts, okay, let's say we have a V reversal and then our corrective. If I get volume here within our corrective, i.e. our simple pullback, again, same concept, simple pullback, push on, okay, that's great. But if I get a bit of accumulation here, I want to see lowering volume on that accumulation prior to a break. Now, with the breakouts, we don't know if there's going to be volume on that break, okay? You only know that after you take it. But when I see that load up, i.e. that coiling of positions on lowering volume, this for me is quite good. Ideally, you get higher volume on that breakout. Okay, so that's how I personally use volume. It's a bit, again, I could go on a little bit more, but that's how I personally use it. Heather, hi Heather. How much money do I need in my first account? Should I try paper trading first? Yes. Where am I from, Pia? I'm originally from Aberdeen, Scotland, but I've lived in Dubai my whole life, mate. So yeah, originally from Aberdeen. My old man worked in oil and gas, and I went back to the UK for university to Stirling. Then I went to the US to do my master's. Came back here, worked in oil and gas for 5-6 years, and then I went full-time trading. But yeah, originally from Aberdeen. Although I probably don't have a very strong accent. Heather, guys, like the stream if you can. I appreciate it. Try to get to 25 likes. That would be great. Heather, how much money do I need in my first account? Okay, so my advice for new traders is start paper trading, yes, initially, because if you're new at trading, you're not going to make any money for a while. Sorry to say it, but you're not going to make money for a while. You might get lucky. Everybody gets lucky in the first 1 or 2 months. If you read the book Trading the Zone, he's got a good kind of explanation on that, basically because there's no fear there. There's no fear of losing money for new traders because you haven't experienced it before, right? You haven't experienced the pain of losing like 4 or 5 trades in a row, or blowing some accounts. You haven't experienced that pain as a new trader. So what normally happens, and it happened to me, probably happened to a lot of you, is you make money your first month or 2. But then the realities start creeping in that this ain't as easy as you probably think. So for a new trader, yes, start with paper trading. Figure out what on earth you're doing first, because it takes some time to really understand the concept. It takes some time to really understand what you're doing with your trading. And yes, in some respects, I believe that blowing accounts is a rite of passage for a trader. I do believe that. I think I could tell you so many things about don't do this, don't do that. I mean, and people told me that, don't do this, don't do that. But you do it, right? And for me, it wasn't until I kept doing it and kept getting that pain that I realized, Ryan, what am I doing? I should stop doing this. So in some respects, I do believe going through the shit is that kind of rite of passage. Now, how much money, I think, is the wrong question. It's not, because if you can't afford to put 50 grand in an account or whatever, it doesn't matter. For me, it doesn't matter. It's not worth it for me. Like if I put $1,000 in an account and I'm making 10 to 40% a year, maybe more on a good year, it's not worth it for that yearly, So I always say the same thing. Learn how to trade first, okay? Learn how to trade first. then go and get funded. You know, because if you get funded, you can get up to, you know, 400 more of funded equity, in which case your 10 to 40% or whatever it is, you know, on a good year you make more, becomes a legitimate passive income, and then plus, plus, plus. Okay, it's all about, for me, it's not about how much I make for me. It's about how much I have. That's it. That's all I'm interested in. I've got a skill now that I've learned that is going to get me no thrills, but it's going to get me a good income better than most, or good returns better than most every year. Now I just need more capital. So I would, with Heather, with that question, I know I've kind of gone on a wee bit, but the question is, it's, yes, you should start paper trading first. If you want to move on to real money, do it with $100, $200, something very small, so that it's not, you're not going to waste your hard-earned money and give it back to the market, because you will do that. Right? So learn how to trade first, and just think, right, I'm doing this. You got to take it seriously. You know, I'm doing this because I want this funded equity. I want this amount. I want this amount. You know, if that makes sense. But yeah, trading with less than 50 grand, not for me. Is it worth it for me? No, I don't think so. But also, it depends on where you live. Some places are more expensive. Some places are less expensive. But if you can trade off $1,000, you can trade off $1 million. It's just an extra couple of zeros, right? Ian, I agree with communities. Otherwise, trading can be a very lonely business. Yeah, it's one of the reasons why I set RTFX up, Ian, is because I was bored. You know, like I said, I could do my job in an hour, and I'm in that in-between stage where I'm making a living, but I'm not making bags of money yet. You know, and I will do, but it's also like, okay, well, what do I do? COVID, and all that kind of stuff. And I really enjoy it. You know, I enjoy being part of a community. I enjoy streaming. I enjoy all that kind of stuff. I enjoy helping people, you know, hopefully develop into decent traders. You know, me, Glenn, and Andrew. So I agree with you, yeah. I used to think they weren't. I used to think, and again, this is the bad thing with the reputation of the industry, is you think automatically, oh, people out there to get your money. You know, they're just starting a business because they can't trade and they want your money. It's not actually. There is some aspects of that in some communities, but there's other great communities that it really does help, you know. And thankfully for me, no one can ever tell me that, oh, you only started a business because you can't trade yourself, you know. Because I'm actually negatively, massively down on my business with the amount of investment I spend in it. But yeah, I agree with communities. I think they're great. All right, guys. If you can like the video. If you got any more questions, let me know. I think I've gone through every one, right? If you got any more questions, let me know. Do you provide live classes in Dubai? No, I don't, Pio. So within our Discord, I'll do the little sales pitch now since you asked me. If you look at the links there or down below, we give 7 days free away. There's me. Obviously, I've been a trader almost 7 years now. Andrew's been a trader for 10 years. We got Glenn out in the US as well. We do live streams like this, so we do it 3-4 times a day. We do mentoring and stuff, but if you live in, I don't know where you live, Pio, if you live in Dubai and you choose to do mentoring, then yeah, we can do one-to-one sessions because I'm here. But I'm not the kind of guy that would do a live seminar, I don't think. I just, for me, it's not that I don't believe in courses. I understand courses can work, but for me, trading is an evolution, right? It's a long-term game. So I could go and, you know, maybe put on a seminar or 2-day seminar, but it's just not something that I think, for me, I would want to do. I prefer to do it, you know, like I'm doing it, and stream every day and, you know, do it that way and help people over the long term rather than in a crammed 2-day period. If that makes sense. But mentoring, yeah, if you live in Dubai and you want to do one-on-one, yeah, I can do that. Absolutely. Samir, how can you set MT4 4 different time frames in one window? All I do, Samir, so if you go to your default here, we can go to default. Very simple. Go to default, we can add in a whatever screen, let's say pound USD. My settings are automatic here. And you just add 4 in. So we've got 2 here. I go like this. Change the time frames, obviously, 1 hour, 4 hour. And there you go. You've got a quick overall view of the market in one fair swoop. So this is really key for me. You know, if I can see the whole market picture in one screen like this, I'm a simple man, remember? It helps me out. Helps me out. That's it. Pips Leader FX, a question: do you see more of OB liquidity void, fair value gap to trade? I don't know. I don't really want to really talk about that kind of stuff because I'm not really massively familiar with it, mate. Liquidity, I mean, Andrew, he's the liquidity man. For me, I just keep things very simple, Pips. I go with the trend. If it's going up, I look to buy it. If it's going down, I look to sell it. So, yeah, I don't really know, mate. I'll be honest with you. I don't know. If there's something I don't know, I'm going to tell you I don't know. And, yeah, better to ask Trader Bridges, if I don't know if he's in the room, but better ask him that question, mate, rather than me. All right, guys, I appreciate you coming. I will see you all on Friday for the $50 competition. Trade safe. Trade safe. Hopefully you got some value. If you did, like the stream. And have a great rest of the week. Cheers, guys. Peace.